Okay, we are live. Okay, welcome everybody to Wall Street Reporter's next Superstock CEO live chat. I am here once again with Logiq and Brent Suen, President, stock symbol LGIQ. And today is October 28th. Brent, welcome back.
Thanks. Glad to be back.
So Brent, we got some incredible news today. You put out this announcement. I don't think the market has really absorbed exactly, what this means for the company potentially. This fintech deal in Indonesia. So can you start off with that? Talk about this new deal and what it could mean potentially in terms of revenues.
Sure. Okay. So firstly, the Indonesian equivalent of our Social Security Administration has been interested for over a year in providing what are called microloans to their members. So think of it as the equivalent of here being able to borrow up to 20% of your Social Security savings. So that is currently what has been recently enacted. They did a request for proposal from a number of companies that are active in Indonesia providing fintech or financial technology solutions. So we actually made the cut and we won the bid, and it was announced this morning. Last night we signed the letter of intent and are currently working on the definitive agreement. But for all intents and purposes, it's our win. They have 48 million members that they administer savings and payroll plans to. Another division of the administration provides healthcare to those 48 million members. Just to put it in perspective, it's 20% of the total population, but it's growing. And this initiative is intended to help spark that growth so that a larger percentage of the population is participating in that. I believe here in the U.S. we've got about 80 some odd percent of the population that is part of the Social Security. So there's a lot of room to go for them, but just the base of 48 million members is significant. So it's a major win for us.
Okay, so 48 million people in Indonesia could be potentially using this platform. So exactly what are you going to be doing and what's the revenue potential? Because that's kind of what our audience wants to know.
Wow, loaded question there. Okay, so two parts to the question. First part, so 48 million people who have their savings plans and payroll administered by the name of the group is BPJS. That's the actual government entity. The partnership we have is with a what they call a co-op that they formed for the express purposes of putting together the platform. So we're the partner with their newly formed corporation. We are able to, through this platform, provide up to 20% of a person's savings via a loan. So we don't provide the loan, neither do they. Financial institutions that they will aggregate, so the major banks there will sign on to provide low interest loans, either in advance of payroll or against the savings plan. So as far as revenue opportunity that stems from that, it would be a percent of the interest that is attributed to the loan. So if it's a pre-payroll loan for a month, we're looking at about a 5% of that amount, of which we would share a percentage of that with the lending institution and then our partnership. What they've modeled out is that the actual potential with a I believe it's around 10 to 15% of the total comes out to almost the entire microloan volume in the whole country, which this year is estimated to be about 1.6 billion US dollars. It's not a lot in terms of what the overall potential, what the overall number is now. But the reason for that is it's a highly fragmented industry. So you've got a lot of private companies trying to provide these loans. When you've got something with a government backing and with legislature that enables that, you've got something that is no longer A, fragmented, and then B, a number of operators operate in what they call the gray market. So
yeah, that space has always had a kind of a shady type of reputation, but people have a need for these services, especially in the developing world. So it's a win-win, and with the government basically behind it, obviously the terms are more favorable for the consumer, so it's a great situation. So revenue potential, we'll have to kind of
let me elaborate very quickly on how to map this out. So in addition to the micro lending, the other very attractive part of this is that they administer payroll and benefit services to 48 million members. Those 48 million members are government employees, state-owned enterprise employees, corporate employees for companies that have signed up. And those corporate entities number over 600,000. So what does that mean? So currently we've got 36,000 small businesses that we provide services to. So those 36,000 businesses have signed up for our e-wallet or food delivery or other through the app fintech services. So what this does is so historically we go out and our salespeople have to get in front of a small business owner. With this, we've got an immediate database of 600,000 businesses that the administration opens up to us and also tells them, this is a preferred platform that you all can use one, two, or all of the services that they're going to layer in. So over the next 12 to 24 months, we'll be providing our entire platform of services plus new ones to these 600,000 businesses, in effect 48 million members. So you look at, call it 10% penetration, that would more than double our current small business base. But these businesses are not just small businesses. Some of them have employees numbering into the hundreds. The average number of employees for our business base is 2 to 3. So it's a significant win for us, not only on participating in the microfinance loans, but also layering in our products and services that we currently offer and additional ones that we'll be introducing over the next year to 2 years. So this is tremendous and well in excess of just micro loans. And it is fully supported by and validated by the Social Security Administration.
Okay, so basically, so there's two parts. There's two really aspects of this. You have the consumer, the consumer part, but even maybe just as or even more compelling is, you're going to be getting in front of all these small businesses. Essentially, I don't want to say with the government, imprimatur, but endorsement, but essentially it kind of is in a way, and you'll be able to. And you'll be able to offer them the mobile e-commerce, all the fintech, all the other services that you have right now, which enable them to do business.
That's correct. It is 100% a government validation, because one of the challenges that companies run into, regardless of size, when they go into an emerging market, even if it's someone like IBM Global Services or Accenture or any of the ones that are household names to us. For Indonesian consumers, sure, they may know IBM, but not everyone knows IBM. So anything that is foreign to them, it needs validation. So it doesn't matter what size company you are. Entering the market is more readily done when you have government buy-in, which we clearly have through this relationship.
Okay. You know what I'd like to do, Brent? I'd like to kind of pop up on the screen a slide that you showed me earlier. Let's see if we can get this onto the screen here. Okay. So we have here with something very interesting. This is kind of some of the valuations in the fintech space, specifically in Southeast Asia, in Indonesia. I was just, reading the couple, some of the latest conference calls with like Alibaba. The CEO of Alibaba was, very specific about saying that Southeast Asia, Indonesia, is going to be a major area of strategic focus for Alibaba. And so there's a lot of people very interested in the space. And the crazy thing is, it's still not as well understood by investors in the US. Although we have companies like SE, the stock is doing phenomenally well. So here we have, and we've talked about this before, is this this kind of these comps that you have in the pure space. You want to kind of explain to the audience exactly what's going on, and then we'll open up for questions. Anybody has questions, please pop them up, and Brent will address them.
Okay, terrific, thanks. So as you rightfully pointed out, and we go through this exercise regularly. I think when the mainstream of investors are presented with something in a market that they're not familiar with, the major question is, okay, well, how do I know that there's validity here? I think the easiest metrics to point to are valuations, and then who supports these valuations, because any company can say, all right, we're worth $1 billion, but then you have to peel back the layers and see who is supporting those valuations. If it's cousin Joe and he said, all right, I put in $1,000 and I own 1/1000%, it's worth $1 billion. Well, that's not much validity. But I think anyone you go to, or let's just say you go to 100 people and you say, what do you think about Indonesia as an investment opportunity? You'll probably have a broad swath who say, why would I want to do that? Or what's the reasoning? So understood. If you look at the two facets of which I'm describing here, so valuations and then who's behind them. So the first company we have here, C, New York Stock Exchange listed. They did an IPO 2 years ago, led by Goldman Sachs and Morgan Stanley. Their current market value is $85 billion. When they IPO'd, it was $3.8 billion. So they've gone up significantly. The total amount invested over these 2 years, including the IPO, and then prior to that in private rounds, is $4 billion. So are there major investors or sponsorship there? Goldman and Morgan Stanley, yes. Going down the line, Grab, not a household name here, but they have co-won the battle of ride sharing and delivery there. They beat out Uber and Lyft in Southeast Asia, and they're currently the leader. They're currently valued at a $20 billion private funding valuation. They've raised $7.5 billion. And I've only put up 5 names of investors here, but Alibaba, SoftBank out of Japan, Toyota Motor, Invesco, one of the top 10 largest funds in the world, Yamaha, and then there's another 15 or 20 investors who are all sovereign funds, Silicon Valley venture capitalists, and major private equity funds, as well as Merrill Lynch. So again, major investors, major valuation, same thing down the chain. So I think in terms of answering those two questions, big valuations, big investors behind them.
Okay, so that's it's very, very compelling. So before we open up to questions, looks like we don't have any questions yet. So shockingly, for anybody that's new, because people are going to be watching this video later on. In a nutshell, what does Logiq do? If you can, just tell us that.
Okay, very simply, e-commerce enablement. So we get businesses that are bricks and mortar or offline, online.
Okay, in specifically in your markets right now, you have Southeast Asia, Indonesia. I think you also have customers outside of the U.S.
We do. We have customers in the U.S. and Canada as well. And in addition to serving small businesses, we also have some major enterprises that are customers as well. So Home Advisor, Quinn Street. Quinn Street's publicly traded on NASDAQ. Orange out of UK, France, Switzerland. I think they've got a $23 billion market cap. So They provide, we're actually in their product catalog in Europe. We've just recently signed with Tech Mahindra, which is based in India but has a global presence, $6 billion market cap. And then Shopee, which is part of C on the larger side. But again, so your question is, where do we operate? Southeast Asia, so Indonesia, Malaysia, Thailand, Vietnam, Philippines, and then US, Canada, and then Europe.
Okay, and the Philippines also, I understand the Philippines is also another area of focus for companies like Alibaba. They're into that, but you're specifically you're focused on the e-commerce enablement through mobile. So essentially that's the thing, right? The mobile, and especially in the developing markets in the developing world, they're essentially leapfrogged. So they're all using mobile phones. Everybody's on mobile. Nobody has a desktop. So this is it's a great thing. Let's talk about the revenue picture real quick, like the current run rate. I don't know if you want to talk about what you're expecting next year. If you want to, we're not. I don't think we're going to talk about what this deal could add potentially, but you want to just bring that up?
Sure. Okay. Just as a disclaimer, we'll be reporting earnings for the third quarter fairly soon. So I can't speak to the third quarter specifically, but we have publicly stated that even with COVID, we're projecting around $36 to $38 million in revenues for this year. So up over last year. And then next year, we're projecting around the mid 40 million, so call it 45 million in revenues. And then the following year, we're penciling out around 67 million in top line. What's more important than just the absolute growth rate from last year to this year to 2021 and 22 is the margin improvement, because most importantly with companies in our space are the gross margins. If you look back at our historical margins, they've been below 20%. We're literally in the process right now of moving those upwards. So what we're projecting is next year mid 30s, the following year mid 40s. So I think with those types of margins going into next year and the following, we look a lot like the Shopify's, the big commerces of the world, which do carry very large valuations. Speaking of valuations, I know you didn't ask me this, but we are 2.5 times revenues. The benchmark valuations for SaaS companies and e-commerce enablement are about 26 times revenues.
Okay, I think probably one of the obvious questions here is you're going to have a pretty strong footprint in Indonesia. There's and the valuation is still relatively cheap. I mean, well, it is not relatively, it is cheap. I mean, 2.5 times revenues. Is there a possibility of a big player like an Alibaba or an SC, one of these guys, Pinduoduo, was it PDD, buying you out at 5 times revenue, 10 times, whatever the number is?
Yeah, that's actually something I can elaborate on, because we have spoken about this on our calls. We've spoken about it in press releases. We are interested in either a strategic investment or an outright acquisition. And that acquisition could come in the form of our Indonesia business or of the entire company. I think that where we are
at a premium to the market, though, right?
Oh, absolutely. Yeah. It's all about price. I don't think we'd entertain anything at the current valuation where we are now. But what is very, very interesting, and I think as it relates to shareholders of ours or potential shareholders of ours, the most compelling part is that what you see of our total valuation does not reflect the valuation of our Indonesia business. Now, we directly own 51% of the Indonesia business, and then some of our shareholders own another 29%, and then the management team in Indonesia owns 20%, which incentivizes them to build the business. if you take current in-country benchmarks and apply it to our business, you would come out with, call it around 80 to 120 million dollars in value there. So 40 to 60 million dollars in value just for that business currently. But when I talk about it, that all of that has to do with the before yesterday's LOI with the Social Security Administration there. So what we believe would be probably the most interesting to us, to our shareholders, and certainly an acquirer, would probably be a foreign group that has an interest in Indonesia. So who could that be? Groups out of Singapore, groups out of Japan, groups out of China, increasingly the U.S.
Groups out of Japan would be like SoftBank.
SoftBank, Rakuten, Mitsubishi. I mean, there's probably, well, not probably. Okay. I know for a fact there's well over 20 major Japanese conglomerates.
SoftBank is the most generous. So.
They're the most high profile, but
right.
Look at the region. I mean, you can do a Google search, Japanese companies interested in Indonesia. I mean, there are some major companies, and investors will recognize the names because they're consumer products companies or internet companies who they'll look at and say, oh wow, they're active in Indonesia. They're making billion-dollar investments there. Yes.
Let's jump to some questions. We've got some questions coming in. We got Phil asking about gross margins improving. Okay, so what are some of the initiatives that will get you to the higher gross margin percentages?
Good question. Thanks, Phil. Okay, those are twofold. So if you look at our historical gross margins on our core business, those have been sub 20% margins because when we started out, instead of having a dedicated sales force to go out and sign up thousands or even tens of thousands of small businesses, we opted to do a white label partnership approach, which is through a revenue share, and we have to support them on the level 2 sales and marketing and on the R&D side. So any new functionality they need built in, we've supported that. So that has unfortunately put us in a sub 20% range. What we're actually doing right now is we are transitioning to more direct sales because the current environment with COVID has improved dramatically the ability to sell directly to small businesses 100% digitally. So what that does is that puts us in a mid 30% gross margin range. So we started that out earlier this year, and we're transitioning to that as we speak. So that's one initiative. The second is our acquisition of Data Logiq earlier this year. They are on a top line revenue run rate that is growing significantly. And with that, so are the margins, because the higher the transaction volume that they're doing, and the more buy side and sell side customers they bring on, in turn improves the margins. So it's not necessarily just initiatives, we're actually putting them into practice or have and are currently bringing them in-house. So we know the margins will improve.
Okay, we got a question from Kevin. Kevin, welcome back. He's asking any further collaboration on Shopee? Will there be any press releases by CSE?
Oh, good question, Kevin. If you look at C, and this is very easy to do, look at their press releases for the past year, and you'll see a noticeable absence of regular press releases. When they do put something out, it's surrounding upcoming earnings and then the actual earnings. They don't do a lot of press. What they do a lot of is in their markets where they operate. So each individual country within Southeast Asia, they do a significant amount of social media. So there has been social media put out by Shopee Pay in Indonesia. Will they do more? One of the announcements that we made recently about launching the mall, the dining in your car at malls, which is actually doing extremely well. I believe they put out some social media co-sponsorship announcements this past weekend. So as far as C doing it, probably not, but as far as Shopee doing it, yes. And Shopee is 100% owned by C.
Okay. Brent, any I know we just had you on just like last week, but any further news on uplisting? Because that's kind of one of the big things that investors are concerned about. You know, how is that moving along? What's happening with the NEO application?
Sure, good question. I'd also like to point out, because I've gotten a number of questions about this directly from shareholders and some of our advisors as well. We did apply for NASDAQ earlier this year. And as I've said, there are every year 300 companies that quantitatively meet all the requirements to uplist, but only 20 to 30 uplist because of internal logistics at NASDAQ. Okay, so that's if you hear the frustration in my voice, I mean yes, there was a lot of frustration associated with that. That process was purely an uplist that we embarked on our own with advisors. Okay, so with 300 other companies in the queue, and so far I think there's only been 12 that have accomplished it this year. It did not go well. Have there been a lot of IPOs? Yes. Have there been a lot of continued listings that have requalified? Yes. The 4 examiners at NASDAQ that handle all those, they are literally inundated. So when we retraced it, we looked at, okay, how can we actually have greater impact? The announcement about the NEO, we are not uplisting the NEO. We are doing a prospectus-based IPO that will be led by an investment bank. So it is the equivalent of doing an IPO here. So you go through the process with the securities regulators, you go through the process with the investment banks, due diligence, roadshow, marketing, pricing, valuation, and you go through the process with the exchange. We are already down the road on that. So some of the questions I've gotten are, what makes this different than what you tried before? It's not an uplisting, it's an IPO. So when we go out, it will have all the hallmarks of an IPO that people are familiar with here.
One thing I think we should also mention, because I don't know if it's been overlooked, but NEO is the Canadian. That's kind of the Canadian. I don't know if you want to call it the institutional kind of exchange, but essentially what this is going to do with the IPO, you're going to be bringing Canadian investment bankers, and you're essentially so Logiq is going to start trading. It's going to be accessible for Canadian investors, Canadian institutions, and the good news about that is that I find that the Canadians are generally more they kind of have more of an international perspective. So I think they would easily. This is something that would be attractive to them. They understand Indonesia. They understand Southeast Asia. This is a story that would resonate with institutions. And of course, that was the home of Shopify, right? So,
right. That's right.
You'll have those, and of course, some of our most successful stocks on the Wall Street Reporter, next super stock, a live stream, have all been TSX Venture, CSE listed companies. So the Canadian companies have done phenomenally well, and we're gonna find out if Logiq is gonna be the next 10 bagger. You're up about almost was it from $4 to $10 recently, back to $9. So there's a lot of still upside. Brent, so let's kind of recap top 3 reasons for investors to consider Logiq today.
Sure. We're in an ultra attractive space, e-commerce enablement. So a very popular theme right now. Secondly, on a due diligence basis, go to our website, look at our board and our management team. It's something that you would see at a considerably larger company. That's important because validation from new hires, independent board members, is extremely important for investors. Then we look at our customers and our partners. Same thing. They go through a due diligence process that all investors should go through whenever they make an investment. You look at the caliber of who the partners and customers are, and you know that they've done a more than reasonable amount of due diligence. So is that a reason to invest? If it satisfies one's checklist, absolutely. And then third, I think absolute valuation versus our peers.
Okay, we'll pop that up on the screen here once again, because I find that such a compelling part of the opportunity. Okay, okay, we got no further questions. I know you're a busy guy here today, Brent, with everything that's happening. So we'll let you go, and we'll catch you on the next live stream. Brent, thank you.
Thanks, Jack. Thanks,
And
everyone.
thank you, everybody, for joining us. We'll see you tomorrow.